Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock. With news, China is buying its resurgent growth, which is coming with some large problem downsides. But first, the US is on a public holiday today, Martin Luther King Jr. Day, and the New York Stock Exchange is closed. Overnight, European markets were mixed. Yesterday, Shanghai rose 0.8%, Hong Kong rose a full 1%, but Tokyo went the other way and was down 1%. In China, their fourth quarter economic growth beat expectations when it was released yesterday afternoon. That growth actually came in at 6.5% and significantly above the expected 6.1%. For an economy as large as China, that difference is quite something. For the full year, it is 2.3% higher than for 2019. Driving this fourth quarter rise is a strong rise in industrial production. And electricity production was up a very impressive 9.1% in December from a year ago, driven partly there by the current cold snap. But retail sales underperformed, rising only 4.6% when a 5.5% rise was expected. Clearly, their two-track dual circulation economy isn't working in a balanced way yet, despite the glorious claims. In fact, the reliance on huge government subsidies and stimulus is making inequality worse in the Middle Kingdom. And productivity, that's output per worker, remains very poor. It is only at 30% of the level in first world countries like the US, Japan and Germany. China's SOEs and investment in public sector projects get the blame. China's real risk is getting old before it gets rich. It must fix its huge productivity problem to avoid that outcome, and sorting out its worsening inequality is where it must start. Singapore's exports staged a significant and substantial rally in December, rising 6.8% after 2 months of worrying declines. This was mainly based on growth of specialised machinery rather than electronics. And in Australia, officials there are now indicating that overseas travel is unlikely to return in 2021. The US Treasury 10-year yield will start today unchanged at 1.09%. And the price of gold is up $8 today in New York in truncated trading, now at $1,838 an ounce. And oil prices are just over $52 a barrel in the US, while the international price is now just under $55 a barrel, and both are very little changed. And the Kiwi dollar is slightly weaker again today from this time yesterday, at just under 71.2 US cents. Against the Australian dollar was softer as well at 92.5 Australian cents, and against the euro we're down to 58.9 euro cents. That means our trade-weighted index is now down to 72.7 and its lowest of the year so far. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.